Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Hello, welcome to today's episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney. As always, it's really good to be with you. Today's topic is a question that I get quite frequently. Should I opt out of my voluntary employer group long-term disability policy? In working with physicians across the country, helping them with their private specialty on occupation disability coverage, when clients become attendings, this is a very common question. Hey, my employer's offering me group LTD. LTD stands for long-term disability. Should I take it or should I leave it? Generally, and that's a good question, generally there is an employer piece where they require you to take it if you're an employee there, and then there could be a voluntary add-on component to the policy that lets you increase and you pay for it out of your paycheck. Now, there's some employers where they don't offer anything that the employer pays for. You just opt into a voluntary or opt out. For our clients who have their private specialty coverage and are able to increase that coverage, generally they will opt out of any voluntary portion of their group long-term disability. The reason is because of quality. There is a big difference between being disabled to meet the definition of disability for your private specialty disability policy and a group long-term disability policy. It's not your employer's fault. It's the nature of the beast when it comes to the insurance industry. By law, an employer has to cover all their employees with a group long-term disability policy. In the insurance world, that's called adverse selection because that means the unhealthy employee gets the same policy and coverage as the healthy employee. And that can bankrupt insurance carriers. They run for the hills away from adverse selection. They really do. And the way they deal with that in the group long-term disability marketplace is by watering down the definitions. So they may use a specialty-specific language or own occupation in the flyer that they hand you or that they give to the employer to give you at the benefits enrollment. But how they define own occupation is very different. It often is physician duties in general, which can include telemedicine, virtual medicine, teaching, consulting, any number of things. If it is a specialty, it's a very broad definition of that. That could be 50 duties, and if you are doing procedures and you do a half dozen duties, then that's a difficult threshold to meet. Your private specialty own occupation disability policy, if it's structured properly, or the clients that we work with, that definition is the best definition on the planet, best definition you can get. It says if you can't do the material duties of your specialty or subspecialty based on the CPT codes or codes that are filed for patients that you treat, if you can't do the material parts of those duties, then you're disabled and you get your full policy benefit. That's the first part. The second part is that there's then no penalty for income you later earn doing something different, okay? So if you're a surgeon and can't do surgery, you get paid. You can then do clinic without doing surgery and collect your policy benefit and earn that income from being clinic. If you're an interventional cardiologist, you can not do interventional. You can go do general cardiology and make an unlimited income doing general cardiology and collect from your specialty policy from not being able to do interventional cardiology. An employer policy is not going to define it that way. It's much broader. It also does not include a long-term recovery benefit. A lot of times if there is a residual benefit, it requires total disability first. So there are numerous gaps in an employer group long-term disability policy. So to answer that question, should I opt out of a voluntary group LTD policy? If you have a properly designed private specialty policy that allows you to increase coverage, then yes, you should strongly consider opting out of that. Of course, discuss it with your broker. I'm happy to help you. Our clients, we talk about those kind of situations routinely. and I would be happy to answer any questions that you have for me. Hope you found this helpful. Thank you as always for your time. See you next time.
Thanks for listening to the Cover Your Assets podcast, an Odd Conduit media production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.